It is Sunday, December 8th, 2013, and we're going to review the commodity trades that we normally take a look at, specifically gold, silver, and oil. And we're looking at the gold weekly chart right now. Each candle represents one full week. Now, if you've been trading with me for quite some time, this chart is probably pretty familiar to you, even back in the summer and also during the late spring. We were trading specifically this T2 pattern. Again, it pops up every once in a while, and basically what the T2 pattern is a reversal pattern, candle pattern. So, for example, if I was to show you this chart and then tell you perhaps maybe it was a 1 hour chart, it's the same pattern. I think I reviewed a T2 pattern just last week from a Euro Yen trade that we took, which was on the 1 hour time frame. So again, it's the structure of the pattern. It's more or less pattern recognition. That's really what you need to develop when trading these techniques. So basically, we were looking at this T2 pattern back in the beginning or the end of May, the beginning of June, and then we traded it back up here again. This is a weekly chart. We traded it back up to the price swing that created the T2 pattern. That's normally the target right here at that yellow line. I'm sorry, that yellow arrow, but also these two yellow lines right here. They created a range or a pocket of resistance. Remember, resistance and support aren't always an exact number. They can be, but they're not always. Often what you'll find is that support and resistance can be a range of or a pocket, as I like to refer to it, a pocket of support or resistance, and you'll find different levels or multiple levels that sort of stack on top of each other, like psychological levels or other price swing highs that are really, really close, and you start to see where price begins to either touch those levels and then hold. We were obviously bullish at that point with this reversal candle here at that yellow check mark, that white reversal candle, which is basically an engulfing candle and at the same time also a Morningstar pattern. And then once it reached that resistance point, we became a little bit bearish. And then back about a month and a half or two ago, we were also bullish for a short period of time, because we saw this bottom forming right here at this yellow X. And then it obviously ran right into that downside of this channel. Now, obviously, that's not what held price here, but technically, it gave us a visual confirmation of the fact that this this support level that or created the bottom half of this channel continues to remain in place and helps with additional forms of confirmation when we're looking at this visually. So now, at this point, we've been bearish for quite some time. We've traded a few bounces off of support and a couple of continuation breakout trades, real short-term trades to the upside, but they're very short-lived. And again, the trend to the downside continues to remain intact. If I tighten up the charts here, you can see that on this weekly chart, gold has it's got a long ways to drop if it was to continue to fall. All it has to do is take out that low of support right there at 1180 and then continue its downtrend. So it can really reach more or less any one of these levels. For it to be approaching or retesting the 618 retracement level that you see here from this old price swing, again, this is a weekly chart. This goes back to September 2008 with that peak back up here. That spike high is June 2011, so it's June 4th. I'm sorry, September 4th. And that's when that high was printed. Now, again, this is the MetaTrader platform, so it might look a little bit different if you're looking at futures. It might be slightly different numbers there. But again, the potential for this to continue to drop a little bit lower is obviously clearly here on it from a technical point of view. It is holding below certain key support levels. So if we go to the 4-hour chart, the 4-hour chart is something that we've been looking at for quite some time, and this is an IMP crown pattern. Basically, it's a head and shoulders pattern. It's a bearish IMP crown pattern, and you have that center point here, the left point, the right point here. We have a final price target on this one of 1180. We've been looking at the possibility of 1180 to be this final target down here for gold to finally settle and find some support. At that point, if it reaches 1180, I would then obviously consider or look for a short-term bounce. But again, going back to that larger time frames, the weekly time frame, we can see that 1180 would be taken out and it could drop down here to even 1022 or 1000. Anything's possible here. So please be very careful. Now we're looking at the 1-hour chart. Now, this is obviously non-farm payroll from last week, and it created a spike low and up, but it's still inside of the previous price swing here. This is what we really need to be watching. This is the most appropriate range relative to this time frame, at least the way I trade it. And I need to see price either reach that resistance point or that support level and then bounce or break out of this range and then possibly give me a continuation breakout trade. At this point, anything's possible. It's just too choppy. I'm probably not going to get a lot of trade signals on gold this week until something happens. Again, either it approaches 1250 or support down here at 1210, right around those ranges. Right now, other than that, it's just right in the middle of these price swings. And you know how I feel about trading inside of the where you see one price swing inside of a previous price swing. I feel that it creates a lot of choppy consolidation, and it's usually inside of consolidation where traders give back a lot of profits. I don't want to trade like that. I'm going to hang on to my profits, so we're going to wait until specific levels. So I don't have to sit here obviously and stare at gold. I can go and look at silver to see how silver is sizing up. But you'll notice here on the silver 1 hour chart, it's pretty much the same thing. We've got this price swing right here, and it's really sitting there just right about in the middle of that range. So if this Fibonacci retracement, now please keep in mind, obviously, if this is consolidation, then this Fibonacci retracement tool applied here isn't really going to help me. It's not going to be that reliable. But if this is the beginning of a temporary support level and price does hold here and starts to take out this B high back up here at approximately 1990, then this could be an accurate reading as far as the depth of this retracement, and then I could start to project some extension targets. I'm really not going to worry about that until I get a solid signal and I know that it's actually going to bounce and continue up, because silver is also in a downtrend, and I really want to be careful with that. If we look at the daily chart, you can see it's probably likely that it could come back down here to this support level down here at approximately 18.20. That is a possibility. But again, price doesn't have to touch support to actually bounce off of that support range or that level. It is possible that it could hold here. This is the daily chart for silver. So I really don't have any signals. Again, going back to the 1 hour chart, it's really choppy here, and I'm going to have to wait until I get some clarity on silver. And lastly, we're going to take a look at oil. Oil, it is finding a good solid bounce off of this support level, but again, it is at resistance. This is the 4 hour chart. This is my nearest resistance point right back up here at 98.80, 98.80. It'll probably tag that and then move through it. It's possible. That is a psychological level, but then again, it's also right here at the $98 level. So that could also provide some temporary resistance in there. And then quickly, we'll look at the 1 hour time frame. This is the 1 hour time frame. This is oil again, and this is the MetaTrader platform. And at this point, it looks like it's probably going to pull away from this resistance area. Remember, this is a major psychological level, a major price point, $98. Again, it could probably bounce back down. We do trade HL30s on commodities as well. So if we were to look at this one, we would find Friday's high, which was again a spike. This spike down and up was right about or just before or after non-farm payroll. Again, the reaction or leading into it, and then the aftermath, obviously back up here, retesting this resistance point. But what we have is 98.03 approximately. 98.03 on this platform. It might look a little bit different if you're actually looking at futures. And then this high goes as high as 97.88. So if it comes back up a little bit higher and tests this level and then reverses, it could possibly provide an opportunity to short this, sell this as a result of the HL30 pattern. So that's really all I see right now. Again, with gold and silver, I'm going to have to wait a little while on those. They are inside of consolidation, pretty choppy in there. With oil, we might see a slight pullback here. So let's just keep an eye on it over the next few trading sessions. It might give us an opportunity there.